Hello everyone, welcome to Road to Financial Freedom and Early Retirement channel. The goal of this channel is to build $2 million portfolio with 200,000 per year income coming from capital gain, dividend income, option trading, and so on. So let's get started. Today we are diving into one of the biggest potential catalysts for the stock market, the upcoming Supreme Court ruling on tariffs. If tariffs on imported goods are rolled back, it could completely change who wins and who loses on Wall Street. Tariff ruling could shake the market. Are you ready? So in this video, we'll look at 15 stocks that could benefit from a tariff reversal and companies that could hurt and how smart traders can position using options and lips. So let's just jump right in. The first group that will be benefited from the tariff reversal is the retail winners, who are the direct beneficiaries. And one of the names is Nike, ticker symbol NKE. Nike designs and sells athletic footwear and apparel worldwide, with most production in Asia. If tariffs are lowered, Nike's import cost could drop, boosting profits and helping the brand offer better prices to consumers. NKE, which is trading at 65.93 as of the video recording date, the average analysis target is 83.27. The second stop is Gap, ticker symbol GPS. The Gap operates popular brands like Old Navy and Banana Republic. Since much of its clothing is produced overseas, lower tariffs would immediately reduce cost and strengthen its retail margins. Gap, which is trading at 24.32 as of this recording date, analyst target is 24.98. However, if you look at 5 years chart, Gap was at once at $35. Next is ticker symbol W, Wayfair. Wayfair sources a huge portion of its furniture from international suppliers. Cheaper imports means better margins and more pricing flexibility in the home furnishing market. Wayfair currently at 106.46. Analyst target is 114. And looking at 5 year chart, Wayfair was once at 342. Next stock that could benefit from tariff reversal is Restoration Hardware, ticker symbol RH. RH is a luxury home furnishings company importing high-end goods from abroad. A tariff rollback could cut costs and expand profit margins on its premium product lines. Currently trading at 159.80. The first year target is 254.12. And looking at its 5 year chart, it was at around 678 or 700 range. Next is Walmart, WMT. Walmart relies heavily on global sourcing to keep prices low. Reduced tariff directly lowers its cost of goods, strengthening its position as America's price leader. Currently at 102.43. First year target is 113.78. Then comes Home Depot, ticker symbol HD. Home Depot imports tools and materials from around the world. Lower import duties means cheaper inventory, higher margins, and potentially lower prices for contractors and homeowners. HD currently at 370.33, and first year target is 435.70. So lots of room to grow. Next is Yeti, ticker symbol YETI. Yeti designs premium coolers and outdoor gear, and much of its manufactured are overseas. A tariff rollback would reduce production costs and support profitability in a competitive lifestyle market. Yeti currently trading as 37.96. And let's look at the analyst target is 40.40. Looking at its 5 year chart, This was one reached 107.67, so lots of room to grow. Now let's look into the technology related stocks who might be beneficiaries of the tariff rollout, tariff reversal. I mean, the first one in technology platform winners is Apple. Apple designs its products in the US but assembles them overseas. If tariffs fail or fall, Apple's import cost would drop, improving iPhone and Mac margins and potentially lowering prices for consumers. Apple, which is right now at 373, is already at 52-week high, but with the news of tariff reversal, it could reach easily to 300. Next is Amazon AMZN. Amazon imports millions of goods sold on its marketplace. A tariff rollback means lower cost for its sellers and consumers, boosting demand and platform growth. Amazon, which is at 238 currently, analyst target is 293, so lots of room to grow again. Next is Meta, META. Meta isn't directly tied to physical imports, but global tariff relief strengthens trade and consumer sentiment. That means more ad spending, a direct benefit to Meta's revenue. Now, Meta is also technically oversold. So right now it's 604.19. First year target is 841, so about $241 gap between current price and the analyst target. And looking at its 5 years chart, as you can see, it was at somewhere around 789 just a few weeks ago. So lots of room to grow for Meta. Next is NVIDIA, NVDA. NVIDIA designs many of its chips manufactured in Asia. So reduce tariff, lower components cost, improving profitability and global demand for its GPUs and AI processors. Next, we'll look at automotive and clean energy winners. And the first one is Tesla, ticker symbol TSLA. Tesla sources components and batteries globally, and tariff reduction could see supply chain cost and make its vehicle more competitive worldwide. In the similar category, Rivian, RIVN. Rivian is still ramping up production and relies on imported parts. Lower tariffs reduce manufacturing cost and supports its path towards profitability. Next is FLNC, Fluence Energy. Fluence provides battery storage technology for renewable energy projects. A tariff rollback could reduce equipment cost and make large clean energy developments more affordable. And next is ticker symbol ALB, Albemarle Corporation. Albemarle is a global leader in lithium production for EV batteries. Improved global trade and fewer export barriers help Albemarle sell lithium more effectively and efficiently worldwide. Now let's look at potential losers. These are the tariff protected stocks that could face pressure. First one is Nucor, ticker symbol NUE. Nucor is America's biggest steel maker. If tariffs on imported steels are removed, foreign competitors could undercut domestic prices and hurting margins. Second is ticker symbol AA, which produces aluminum in the US and benefits from high import duties. A tariff rollback would likely flood the market with cheaper imports, pressure prices. Next one is Ford. Ford builds most of its vehicles domestically. Lower tariffs would make foreign made cars cheaper, intensifying competition and squeezing Ford's pricing power. General Motors, GM. GM faces a similar challenge. Reduced import duties could lower prices for foreign automakers and chip away at GM's US market share. PCAR makes heavy duty trucks under Kenworth and Peterbilt brands. If tariffs on imported trucks are eased, new global competition could pressure domestic production. Lockheed Martin, ticker symbol LMT. Lockheed Martin is a defensive giant that thrives in protectionist environments. In a freer trade, pro growth market, investors may rotate funds away from defense names like Lockheed, NOC, Northrop Goldman could also tag as investors shift out of defense stocks and into growth and trade sensitive sectors. Next is HILL, Hill International. Hill International focuses on domestic engineering and infrastructure projects. A more open trade environment could shift investors' focus towards global growth rather than the US construction plays. United Health, UNH. United Health is a stable healthcare leader in a tariff relief risk on environment. Defensive names like UNH often underperform as investors chase growth. HUN, Huntsman. Huntsman manufactures chemicals and polymer largely in the US. Cheaper foreign imports could reduce its pricing power and profit margins. And last is CPRT. Copart operates used vehicle auctions. While not directly affected by tariffs, it's a defensive stock that could see less interest if investors pivot towards cyclic trade beneficiaries. And lastly, we'll see the trader setup, how traders can position. For bullish traders, consider long dated call options or leaps on winners like Nike, Apple, or Walmart. Lower tariffs could boost their earnings power over the next year or two. And for bearish setup, look at long term puts on companies that benefit from tariffs, such as Nucor, AA, or Ford. If the ruling rolls back protection, this name could lose ground. And the key is timing and risk control. Use spreads to define risk and size trades carefully. Supreme Court decisions can take time. Patience and position management matter. Again, this is not a financial advice. Please do your own due diligence before investing. If you like this video so far, please like and subscribe, and I'll see you in my next video.